There's many different ways to make money day trading, but I'm going to share with you what works for me and what I like to focus on when day trading the stock market. But before we do that, let's make sure you know exactly what a day trade is. The simplest answer, a day trade is when you get in and out of a stock the same day, hence the term day trade. So then if I'm only holding these stocks for the day, how can I make any real money? Because when I'm investing into stocks, I'm holding it long term, so it can take weeks, months, and years for it to grow. So how can I get that kind of move in price in a single day? And the answer is volatility. Volatility is used to measure the activity in price. Think about being on a boat on a calm lake. It's a sunny day, water is very steady, and there's no signs of any unexpected weather. That is a very low volatile situation. Higher volatility will now raise the degree of activity in that water. So let's say you now somehow end up in a storm in the middle of the ocean. There's big unexpected waves now. You have more uncertainty of the control of your boat. Now you're in a high volatile situation. So if we translate that into stocks, here we can see a chart of the broad market. Price is steady and moves in a calm fashion. But as we get hit with COVID in February of 2020, we see more fluctuation in price, more swings and rapid moves than normal, and there's more uncertainty of where it's going. What took over a year to grow, we got that same price move in just a month. So that was a very volatile time in the market. So as a day trader, I like to look for stocks that are high in volatility for that day. Now you might be thinking, isn't that more risky? Yes, that may be true when you're investing into stocks long term. You want that low volatility, steady price move higher. But remember, as a day trader, we need those prices to move now so we can make that money. And there's a way to do it while controlling our risk. So now the question is, where do I find these higher volatile stocks each day? And I find them in stocks that gap in price. A gap is when the price opens higher or lower than the previous day's closing price. For example, if a stock closes at $10 today and opens tomorrow at $5, that's a 50% gap down from today's price. Imagine being in this stock and you wake up the next day to find it down 50% against you. And it's not just you, it's everybody that's in this stock. So what's going to happen is this is going to cause a lot of attention and a lot of activity that day because of the shock value it carries and the gap in price. So as people start to panic sell, it's going to put pressure on everybody else in it as the price continues dropping, because when we have an abundance of supply and everybody trying to liquidate that supply, it's going to create this snowball effect. And this is when I come in and put my superhero costume on and short the stock to take advantage of the price move lower. If you don't know what shorting is, all you need to know for now is that buying makes you money when the price moves higher and shorting makes you money when the price moves lower. But knowing how to do both gives me the opportunity to make money in any direction the price moves. But now let's flip that card and say the stock just opens flat at the same price. Closed at $10 and opened at $10. Boring, right? Whoever's in it may take a peek at it and then just go about their day. There's nothing to do with it. So I'm not going to be expecting any big moves outside of its usual activity, which is why I like to focus on stocks that gap. And usually what causes a gap can be some news about the company or an earnings report. But to me, the reason why doesn't matter because it's already factored into the gap. It's already happened. The reason would only be useful before it happens. Let's say someone got shot. The doctor is not going to ask them, why did you get shot? And treat the wound differently depending on the reason. You may ask out of curiosity, but the why doesn't really matter. That gun wound is a freaking gun wound, okay? The doctor is going to treat it the same either way. The reason why the person got shot would only be useful if he or she can go back in time, knowing the reason, and can then prevent it. Does that make sense? As a matter of fact, this may surprise you, but I don't even know what majority of these companies even do, because all I care about is the supply and demand. Let me explain. When we got hit with COVID last year, there was an extreme high demand for face masks, hand sanitizers, and for whatever reason, toilet paper. This year we saw shortages in graphics cards and people were reselling them at ridiculous prices. And if you're into sneakers, there's a big resale market in that because of limited supplies and high demand. So the question I have for you is, during times like these, how important is it for me to study financial statements on Charming to sell toilet paper, or balance sheets on Nike to resell some Travis Scott Jordan 1s I got at retail price. How important is it for me to read earnings reports on Nvidia to resell some GeForce RTX graphics cards? Who gives a shit? As long as I understand the high demand and I have the supply at the right price, I can make money no matter what that item is. And same applies to stocks. I don't care what every company does out there. All that matters to me as a day trader, as a reseller, is the imbalance in supply and demand for that day. Let me show you a real example of a trade I took today. So the time of this recording is Friday, December 3rd, 2021. The stock is SWBI, if you want to look it up and follow along. The stock gapped down about 20%, and I called this play live for our members in the trading room at the open on a breakdown pattern I found on the intraday time frame. And I was looking for the price to drop to $16 as my final target. Pretty much ended up being an all-day hold, and guess where it got to? Exactly $16. And I'm able to do this not because of earnings reports, which is why it gapped down, by the way, but because I know how to analyze charts. I didn't even realize this stock was Smith & Wesson, the gun manufacturer, until someone pointed it out in the room. I mean, I shot their guns at a range before, but other than that, I don't know a damn thing about the company's fundamentals, but still make the most money for me today. Now, of course, there's a place for fundamental analysis in a company if I'm looking to invest long term, or you bet I'll be studying the company's 10K. But as a short-term trader, because I'm in and out so quickly, it has no value to me. So let's recap. As a day trader, because I'm in and out the same day, I have to scan for volatile stocks, things that'll be moving a lot that day, and I can find them in stocks that gap in price. And this gap causes an imbalance in the supply and demand, and being able to read the price action, I'm able to take advantage of the move in price. Now, I don't want you to go out there and start buying stocks that are gapping up and shorting stocks that are gapping down, because it's not that simple. Please do not do that, because you'll be very, very disappointed. There's an entire methodology behind what I do, and what I'm sharing with you is just like the back cover of a book, okay? We haven't even opened the book yet. I'm just trying to help you understand the concept of how I make money day trading. So this is not financial advice at all. This is just for educational purposes only. I hope you learned something new today. If you did, hit that like button. I'm throwing out weekly videos, so subscribe for more content. Do something productive today. As always, I appreciate you for being here, and I'll see you on the next one.